Subscribe to my channel, UK Pensioner News Today. For thousands of pensioners across the UK, the words tax and pension are enough to trigger anxiety. Every year, rumours spread about possible changes to personal allowances, frozen thresholds, or reforms that could quietly reduce the money you depend on. Many people who've worked all their lives now find themselves asking a worrying question: will my state pension be taxed one day? Recently, that fear has grown stronger as the state pension continues to rise while the tax-free personal allowance stays the same. The thought of being pushed over the tax threshold, not because you earned more, but simply because of government policy, has been deeply unsettling. That is why the latest confirmation from Rachel Reeves has caused a wave of relief for people who rely solely on their state pension as their only source of income. Let's break this down in simple terms. If your only income is the state pension, you will remain tax-free. That is what has been confirmed. No complicated forms, no unexpected tax bill, no letters demanding an explanation from HMRC. Just the reassurance that the money you receive each week or month will stay in your pocket. For people on a fixed income, that sense of certainty is priceless. Many pensioners carefully budget every pound they receive. They know exactly how much goes on rent or the mortgage, how much is needed for heating, groceries, prescriptions, and transport. Even a small tax deduction could make a big difference to quality of life. This confirmation removes a huge weight from their shoulders. This issue has become bigger because of the rising state pension. Each April, the state pension is adjusted under the triple lock system, which means it increases by the highest of inflation, average wage growth, or 2.5%. On the surface, this is good news. It means that pensions rise in line with the cost of living and wages, helping pensioners maintain some level of financial stability. But here's the problem. While the pension goes up, the personal tax-free allowance has been frozen. When one number rises and the other stays the same, eventually they meet. That is exactly what was about to happen. The full new state pension is now very close to the tax-free threshold. Many people believed that once the pension went over that limit, tax would automatically be applied. That's where the Chancellor's confirmation makes a difference. She has made it clear that people whose only income is the state pension will not be dragged into the tax system simply because of an accounting technicality. You will not be forced to submit a tax return just because the pension has increased slightly above a certain line. That is a powerful promise for millions of pensioners who depend on nothing else but that weekly or monthly payment. However, it is important to understand exactly who this applies to. This protection is specifically for people whose only source of income is the state pension. If you also receive a private or workplace pension, income from part-time work, rental income, or significant interest from savings, then your situation is different. In those cases, your total income may still be assessed for tax. That is why this announcement is mainly aimed at people who rely solely on the state pension and nothing more. It is designed to protect the most financially vulnerable group of pensioners. For many, this is seen as a move of compassion and fairness. After all, the state pension is not a luxury. It is a foundation of basic support that people have paid into through national insurance contributions during their working lives. Taxing it would feel like being charged twice. First, you paid in while working. Now you would be taxed again while receiving it. This is the argument that many people have been making for a long time, and finally it seems to have been heard. Still, not everyone is completely satisfied. Some critics argue that this creates a divide between pensioners. On one side, you have those who only receive the state pension and will remain tax-free. On the other side, you have those who may have saved responsibly into a small private pension or worked part-time to supplement their income, and they might now face tax simply because they tried to improve their situation. From that point of view, the system can look unfair. It appears to reward those who have only the minimum, while making it harder for those who try to plan ahead or stay productive in retirement. This is a debate that is likely to continue for some time. Another point that has made people cautious is the time frame of this promise. The confirmation has been made for the duration of the current Parliament. In simple words, this doesn't necessarily mean forever. Governments change, policies change, economic conditions change. Right now, the message is clear. During this Parliament, state pension-only income will not be taxed. But what about the future? That is something nobody can guarantee. And that is why staying informed is more important than ever. This is where understanding the broader picture matters. The government is trying to balance a difficult budget. An aging population means more people are drawing state pensions for longer periods of time. Healthcare and social care costs are also rising as people live longer. At the same time, the working population that pays for these services is not growing at the same speed. All of this puts pressure on the public purse, so the government looks for ways to manage spending and increase revenue. Taxing state pensions was one idea that worried many people, but at least for now, it appears to have been taken off the table for those on state pension alone. In the meantime, other pension-related policies are being reviewed. For example, rules around private pension contributions, salary sacrifice schemes, and tax relief on pensions may face changes in the future. While these issues may not affect all pensioners directly, they could have a big impact on people approaching retirement and those still in the workforce. What happens to today's workers eventually becomes tomorrow's reality for future pensioners. So the conversation does not end here. If you're currently a state pensioner and your only income is the state pension, the key message to remember is simple. You will remain tax-free for now. You do not need to panic. You do not need to contact HMRC. You do not need to fill in extra paperwork unless your circumstances change. But it is still wise to stay updated because policies can evolve over time, sometimes quietly, sometimes suddenly. For those who are nearing retirement age, this news may influence your planning. It might make you more cautious about taking on extra work or drawing money from a private pension if that may push you into a taxable bracket. On the other hand, it might give you confidence that your basic state support is secure, at least for the next few years. This knowledge can bring a sense of stability at a time of life when certainty is hugely important. Beyond the financial figures and political decisions, this announcement touches on something more personal: dignity. Retirement should not be a time of constant fear and confusion. After decades of contribution to society, people deserve clarity and peace of mind. Knowing that the basic pension will not be taxed if it is your only income allows you to plan your life with a little more confidence. It means fewer sleepless nights and fewer worries about letters coming through the door with demands you cannot meet. There is also the emotional side. Many pensioners already feel overlooked or forgotten. They see headlines about young people, about businesses, about investments, and often feel that their voices are not heard. So, when an announcement is made that directly acknowledges their situation, it feels like genuine recognition. It sends the message that their needs still matter and that their struggles are being taken into account. But remember this: information is power. The more you know, the better you can protect yourself and your future. That is why it is so important to stay up to date with the latest developments, announcements, and potential changes in UK pension policy. Big decisions are made in Parliament that can affect your everyday life, whether you realise it immediately or not. And this is exactly why UK Pensioner News Today exists. This channel is here to take complicated government announcements, budget updates, and policy changes and break them down into simple, easy-to-understand language. No confusing jargon, no political spin, just clear information that helps you understand where you stand and what it means for your money, your pension, and your future. As we move forward, there will no doubt be more discussions around pensions, tax, retirement age, and government support. Some changes may be positive, others may be worrying. But the worst position to be in is not knowing at all. When you don't know your rights or the latest rules, you are more vulnerable to mistakes, confusion, or even scams. Staying informed is your strongest defense. So for now, take a deep breath. If your only income is the state pension, you are safe from income tax on it during this Parliament. Enjoy the peace of mind that comes with that assurance, but also stay alert, stay aware, and stay connected to reliable updates. And on that note, I'll remind you once again, subscribe to my channel, UK Pensioner News Today. Here, I will continue to bring you the latest pension updates, explain what they really mean for you, and help you navigate the changing landscape of retirement in the UK. By subscribing, you make sure you never miss important news that could affect your income, your benefits, or your future security. Stay with me, stay informed, and let's face the future together with knowledge and confidence.